Hey everyone, this is Rangadad. This is just the way I'm looking at the market. It is not financial advice. If you're looking for financial advice here, then you shouldn't be here. But hopefully, I don't know, hopefully it does provide some sort of benefit if you're into trading. It's just the way I'm looking at it. Interesting day today. I will actually start on the short time frame, especially for those in Tradior that are running the bots. I was really glad that we got into a long here. Not necessarily because I thought it was going to pay, but what I didn't want going into the CPI data announcement was not being in a position and just getting whipsawed out of it. Like if we weren't in a position and that candle happened, we would have been taking a long there, most likely. And then it would have stopped us out, obviously. But we had a good run up yesterday. I was a little surprised we didn't get more of a pullback on the way up. So that was a good trade overall. Closed it out pretty well. And this is not a bad short entry. It ended up being a profitable trade, but not a huge win. And at the moment, obviously, we're just sitting here back in this freaking zone. This has been a very highly traded zone in this last couple of weeks. A lot of volume through these areas. And we now have two attempted breakouts of this 200 EMA, which is basically this 57, 58 level. We even had a third little one in there as well that looked like it was going. I was sure that was going to go straight out. Then again, I was sure this was going to go to 60,000 as well. And the interesting thing is the order book actually shows us why that probably didn't happen. And it also potentially shows us why we may not see that for a little while. So I'll bring that in now. Now, this is CoinAnk. I managed to spot this on the Traders Reality sessions that he does. Never heard of it before I saw that. And it's very interesting in that it actually gives you the large orders. So if you want to set it up yourself, in indicators, you're looking for the large order limit. Okay. There's probably other ones in there that you can use as well, depending on what you're looking for. But all I've done basically is turn the large order limit on, and I've got a couple of my standard EMAs that I like to see. Now, what I was going to draw attention to was price seems to be really reacting to these higher orders that are coming in. Okay. As soon as we, damn it, oh, there we go. Sorry, I wasn't dragging properly. The one thing I was surprised was we didn't take at least those orders there on the way up. But you can see here that there's a lot of, if you think of these as like gravity, the market makers want to fill these orders. They want to take your money, basically. And you know, it was surprising we didn't tap into that one. I think there might have been there was a partial fill on that, but not all of it got filled. And then as soon as these big ones are in here, you just know at some stage it's going to come back. And interestingly, that's pretty much where price stopped. There's a little few orders down here, but obviously not enough to be of interest yet. And then, as you can see, as you start dropping, you start getting people placing bigger bets. And I don't know if these are stop orders. So they are potentially like stop loss orders, limit orders on the books. but they could be spot orders as well. I think that's what I've got the settings at anyway on this one. But yeah, you can see once the big orders come in, we tend to gravitate back up towards them. Again, left a fair bit there, but on the way up, they were getting a lot of orders coming in as well, a lot of decent orders. So you can see we just rip back down, straight back into that zone, and then rip back up to take all these. And it just seems to be that when these bigger orders coming in, and this, you can see this on the shorter timeframes as well, like these little moves in here on the shorter timeframes, all these little moves are just sucking up bigger orders. So it's quite interesting to watch this at the moment. And when you look at it right now, there's not a lot of big orders to go into up further. There's not a lot below as well, but when you look at this imbalance here, there is a lot more orders below to go into than there is above. Okay. So just looking at this principle alone, and it looks like some people are taking shorts on fairly low leverage. I would suggest that's probably a 25x leverage type thing, but probably even less than that, to be honest. But yeah, the majority of the orders are sitting below at the moment. So it would not surprise me at all if today we come back into this area. And I guess with that, all that being said, when we do go and look at the daily, this here is a topping pattern or a reversal pattern or whatever you want to look at it as. Basically a double tweezer. So you've got the main body is relatively small and it's towards the bottom of the candle. It's essentially suggesting that the buyers are exhausted at the moment. We've tried to break this twice. We've pretty well recovered the majority of this candle here. There isn't a lot of imbalance at the top of this candle. We got very close to that 20 EMA there. Look, there is a chance that this candle closes very differently. We could have Asia come in before the close of the daily and just rip this to the upside. I don't think that's very likely. There is like the top of this order block here is sort of, what is it, 61,200. So that is a possibility. This level here is 6,600. And they're the kind of levels that we've been talking about for the last few days as being pretty important for Bitcoin. 60,000. Top of this wick here is 60,464. So that is still a potential target, but it's just the balance of the order book seems to be down in around here, and potentially down a lot lower too, down into this 48K mark. I don't think it goes straight down there, but it's just something to be wary of. So longs seem to be being sold off quite quickly at the moment. And until that really changes, the downside does look reasonably likely. So we've still got the same situation that we talked about the other day, where we do have a bit of an imbalance here as well. So back into that low 55s mark, which would see a reasonable amount of orders taken up. But there is the potential for us to break down through that area and actually go quite a bit lower as well. So at the moment, this is kind of still looking like a bit of a bear flag. You know, that, let's just measure that out. I'll call it from the break of that down to there. If we were to break down, what are we looking at? I just got an alert. That actually proofs out to around that 47, 48K mark. So it's interesting confluence with the bottom of that order book, to be honest. That is very interesting from what I'm seeing. Now, the 15-minute, sorry, I'll get rid of that. 15-minute, we are looking at obviously a bit of volume left up here as well to go back to. But on the order book, it's actually pretty light. There's not a lot of orders in there. So at the moment, it's looking down. Now, the other interesting thing is if we go over to US market, it has done some really fucking weird shit. NASDAQ, big sell-off. I haven't had time this morning to actually go into why this might be happening. And it probably needs a little bit of research, to be honest, before I start talking about it too much. But I saw the data come out as well. I'm just sorry, I'm looking for the Forex. Damn it. I can't think of the website at the moment for the news, but obviously the news came out about where was it? Yeah, news came out about the CPI figures, and it was looking pretty bullish after that. Like Bitcoin started to rally, but then sold straight off. So there was something about those figures that they didn't like, or there was some other news event that they didn't like. Interesting that it did go back up through the day, but that is, oh no, sorry, that's today there. Sorry, what we got? Okay, so it actually must have gone up a tiny bit. Did it? Let's go back down. This one. Yeah, so we did have a bit of a spike on the news of the CPI, and then it just sold straight off. Interesting. Finding a bit of a base there around that moving average, but that's a pretty big sell-off on bigger volume than what we've seen recently. And that's why I've sort of been warning that it's hard to short this market. It's going to happen quickly. The thing is, if you are in these sort of markets, take profit on the way up. And don't be tied to a position or tied to an idea of it going one way or the other. Interesting double top on NVIDIA here. At least that's the way a lot of people will be looking at it. The future for NVIDIA, if this is a proper sell-off and a proper double top type pattern, we're probably looking at a bit of this action down into this region here would be a pretty critical zone, and probably do something like that down back into these levels here. That's going to be a fairly critical target level, I'd say, for NVIDIA over the next couple of months. If this is a proper sell-off, you can see here we had a similar candle that, we got the bounce here, but typically these sort of double top type candles, the fact that we didn't break to new all-time highs, it's looking like it's downside. Okay. But the weird thing about the markets, and this is what I don't understand at the moment, is your equal weight actually jumped. And jumped significantly. It's not like it was a little move in here like we've been getting in this region. That's a big jump on the equal weighted S&P. I can't explain it yet. The Q's equal weight has come down a bit, but it's actually looking healthier than the overall the Q's in general, which could be, for some reason, the Mag 7 seems to be the one that's caused the majority of this drop. Okay. So Nvidia's been smashed. Let's have a quick look at some of the others. Tesla has been hammered. A lot of profit taking in that, I would say. 800 EMA is an interesting one there. Probably going to get a bit of support there, I would think, but Tesla can just rip through these levels. It's a very emotionally traded sort of stock. So Apple's down as well. Amazon got hammered. What's the? I'm just gonna have a look at KRE. KRE jumped. I was expecting this might be due to some sort of banking thing, but the regional banks have just had a big, fucking massive day. And that's the other thing. IWM, which has a lot of banks in it, IWM's almost breaking out. Can't explain that because, except for the fact it's probably money moving around the market. Like, I fully expected if the Nasdaq and the S&P started dropping hard like they've done, that the whole market would start dropping and people would be pulling money out. But they've obviously shifted into things that they like the look of. Industrials are up. XLY, XLP is down a little bit. So that's suggesting a little bit that the underlyings aren't there for this, the overall market move. But, it's still uptrending as well. DJI versus gold. So gold did have a breakout. This could be part of the reason why the rest of the market has moved up a little bit as well. People actually moving out of the dollar. Could be something to do with what Powell said as well. Okay, let's think about the CPI is down. Yeah, okay. This would explain it potentially. Is a theory. CPI was down, month on month was down, year on year was better than expected. Basically, inflation is still heading down. So when it comes to the Fed, inflation's coming down, jobs are actually, or jobless rates are increasing. So more people are out of work, so they could balance that by actually reducing the rates. There's now scope for them essentially to say, okay, we're going to reduce rates because inflation's still coming down, and we need to help the economy out a little bit. That would hurt the dollar in terms of rates are going to drop, so the value of the dollar drops because you're not going to earn as much money by holding it. So this drops. Also, IWM is all the smaller companies that are highly leveraged in terms of they've got a lot of loans, and interest rates affect these companies more. So lower interest rates means these are more attractive. Same with some of the S&P 500. I don't know why the Nasdaq's dropped that much. So I would have expected the Nasdaq to go with everyone if this sort of thing was playing out. So it's a little bit of an anomaly as far as I can tell. High yield has jumped as well, which kind of plays with that theory that I'm talking about. A little bit of volatility jump still. Nothing huge, but yeah, I think that the Dixie US dollar breaking down is probably the driver of most of this. The skew is interesting because earlier it was looking better than that. So it's actually has dropped now with this drop on the S&P and the Nasdaq, suggesting that the money movement is only the beginning. Yes, they may move into other areas, but whether that lasts very long or not, I have to wait and see. Copper is dropping, which kind of unexpected. If the economy was healthy, I wouldn't have expected this when we got IWM and US dollar coming down and IWM going up. But this is suggesting that the economy is weakening a little bit. It's still like if we bounce off these key moving averages here, it's still a higher low. So it's still a reversal. And I think we did point out the fact that this is probably going to be a key support level here. So look for tonight for that to bounce up. If we get a bounce up on copper, potentially the overall market will actually bounce as well. So it's looking choppy. Anyway, gold had a good day. That looks set to break into new all-time highs. That is a pretty key resistance level though, so probably wait for the breakout. If we break out of that, then we're probably looking at, let's quick look, as a minimum in the short term. Do it the wrong way around. We're probably looking at 2,700, 2,600 at least. 2,600 would probably be we break out of this channel. Yeah, we'll call it 2,600 for probably the first stopping point from there. Silver should have broken out. Oh, silver's not as strong as gold there, which is interesting. Japanese, okay, interesting. Looks like the Japanese have intervened now, which may also be the reason for the drop on the Dixie, because they have to sell US bonds or US backed assets to actually manipulate their currency. So that's definitely got the signs of an intervention there. Brazilian is still there. Money supply is still ticking up. US 2-year, 10-year. Looks like we are rolling over. So again, target is actually somewhere down here on this next move down. I think we'll probably bounce before we actually clear that inversion level. Some of the bond, what do they call them? Anyway, some of the indicators have already uninverted for the different bonds, like the 3-year, 2-year, 3-month, 2-year, 3-month, 1-year, 5-year, 20-year, stuff like that. People look at the whole yield curve across the different bonds. And the thing that suggested we are going to head into a recession, even like this doesn't necessarily predict recessions every time. The fact that we've been inverted for so long does, but right at the start, it's more the number of different yield curves that were inverted reached levels that we've seen previously in the 2008 crisis and all that sort of stuff. So this is an interesting one. The number of stocks, the percentage of stocks above the 50-day average is actually bumped massively. Like that's a huge jump. It just shows you the flow that's gone into IWM to create that pump today, particularly into those small cap stocks. Oil has jumped a little, so oil looks like it's finding a bit of a base here. So target would still be into that 87 mark, which may affect inflation down the track. So that's a bit of a wrap for today. It's a longer video than what I was hoping, but ETH did hit its value area low, and again, got very close to that 20 moving average on the daily. But it is above the 200 EMA too. So ETH's still got the ETF news and stuff in terms of when it's going to start trading. So it could still pump a little bit. But at the moment, like with this sort of pattern, it's suggesting that downside is more likely. For this to be a full reversal, you need to clear above that wick on reasonably high time frames, at least an hourly or better yet a 4 hourly. In which case I would be expecting to come back up into this region even 62,500-ish. I think we'll probably find some resistance at that level, but that's what it's looking like. And look, we've had a big run down without really a decent bounce up. So that's on the cards, but that's a lot of resistance to get through. You just don't have the orders coming in yet at the moment to suggest that's going to be the case. Okay, and after that much of a drop on the NASDAQ, I think Bitcoin will struggle to actually go up today. Where are we? What's it looking like here? I might try for a bit of a little run to the upside. This is forming a bit of a base structure, but could also just be a bear flag too. So just a quick look on the 5-minute time frame. Quick update on that. Not seeing a hell of a lot coming in. There's still more to grab down here, I think. But yeah, it's interesting how these start coming in here and then it just goes, oh yeah, okay, we'll take this one. Oh, there was a big one that came in here. We'll wick up and take that, and then no, let's go down and grab these ones. We got enough orders down here to go for now. So it's just this is a really interesting chart to be watching if you're doing if you're manually trading Bitcoin on the shorter time frames, then this sort of chart is very useful. I would highly recommend. There was some big transfers of BTC and ETH into exchanges from unknown wallets yesterday as well. So this is an alert system that's provided through CoinAnk as well, which I think is quite handy. That's not a huge one. We were talking hundreds of millions yesterday that were transferred into the exchanges. This is just a transfer between Kraken wallets. But yeah, it's interesting to watch. Okay, that'll do me for today. I'll